The average person who loses their job takes about 5 months to find a new one. That's 150 days of groceries, rent, car payments, and everything else, with no paycheck coming in. And here's the thing most people don't realize until it happens. The first 48 hours after losing a job are when the most important money decisions get made. Not weeks later when panic sets in, but right at the beginning. The moves you make in those first 2 days can determine whether you're okay in month 4 or whether you're drowning in debt by month 3. So let's walk through what actually happens to your money the moment that job disappears. Before making any decisions, you need 3 numbers in front of you. First, how much money do you actually have right now? Check every account. Checking, savings, that old account you forgot about. Write it down. Second, what are your absolute essential monthly expenses? Rent or mortgage, utilities, minimum debt payments, groceries, insurance. Not your usual spending, the bare minimum to keep the lights on and food on the table. Third, how much runway does that give you? Divide your total money by your essential expenses. That number is how many months you can survive without income. Most financial experts suggest this calculation should be your starting point for every other decision. According to the Federal Reserve, about 37% of Americans couldn't cover a $400 emergency with cash or its equivalent. That means more than 1 in 3 people who lose their job have less than 1 month of runway, sometimes just weeks. This is why the speed of your response matters so much. When your runway is measured in weeks instead of months, every dollar you can preserve or bring in becomes critical. Understanding where you fall in this spectrum helps determine how aggressive your next moves need to be. One option many people don't realize is time-sensitive: unemployment benefits. In most states, you can file a claim the same day you lose your job. The money doesn't start until after a waiting period, usually 1 week, but the clock doesn't start until you file. Waiting even a few days means losing money you qualified for. Benefits vary by state, but the national average is around $385 per week. That's roughly $1,540 per month. It won't replace your full income, but for someone making $50,000 a year, unemployment typically covers 40 to 50% of lost wages. File online through your state's workforce website. You'll need your social security number, driver's license, and employment history for the past 18 months. Here's how this played out for someone we'll call Sarah. She lost her job on a Tuesday. Her employer offered COBRA. That's the option to continue your employer health insurance by paying the full premium yourself. Sarah's COBRA cost was $680 per month for family coverage. She had 60 days to decide whether to enroll. Instead of deciding immediately, she spent 3 days researching marketplace plans through healthcare.gov. She found a comparable plan for $340 per month after subsidies because her income had dropped. By taking those 3 days to compare, she saved $340 every month. That's $1,700 over 5 months. Money she needed for rent. This is when many people go through their bank statements line by line. Subscriptions are the usual first target: streaming services, gym memberships, software you forgot about. The average American has about $273 in monthly subscriptions. But there's a deeper level here. Some financial planners suggest looking at variable expenses: eating out, entertainment, shopping. One approach is moving to a cash-only system for variables. When the cash is gone, spending stops. Another common move is calling service providers: internet, phone, insurance companies. Many have retention departments that can lower your bill if you mention you're dealing with job loss. Reductions of 20 to 40% are not unusual. The Federal Reserve reports the average American household with credit card debt carries a balance around $6,270. When income stops, this becomes a ticking clock. Credit card interest typically runs 18 to 24% annually. On a $6,000 balance, that's about $90 to $120 in interest every month. Money that's just evaporating. This is why many financial experts suggest prioritizing minimum payments on credit cards above almost everything except housing and utilities. Missing a payment doesn't just cost fees, it damages your credit score right when you might need it most for things like renting a new apartment. When money is tight, not all debts are equal. One framework that financial advisors often reference: secured debts come before unsecured debts. Secured means the lender can take something if you don't pay, like your house for a mortgage or your car for an auto loan. Unsecured debts like credit cards can hurt your credit, but they can't take your home. So the hierarchy many people follow: mortgage or rent first, then utilities, then car payment if you need the car for job searching, then minimum credit card payments, then student loans, which often have hardship deferment options, then everything else. This isn't advice. It's just how the math and risk tends to work out. Consider Mike, who lost his job with $35,000 in student loans and $8,000 in credit card debt. His student loan payment was $310 per month. His credit card minimums totaled $240. He had maybe 3 months of expenses saved. Mike called his student loan servicer and requested a forbearance due to unemployment. He was granted 6 months with no payments required and no damage to his credit. That freed up $310 per month, $1,860 over 6 months, that he redirected to his credit card minimums and essential expenses. When he found a job 4 months later, he resumed student loan payments. The interest that accrued during forbearance cost him about $290 total, but it prevented credit card default. While searching for a new full-time role, many people look at short-term income sources. This isn't about replacing your salary, it's about extending your runway. Gig economy work like rideshare, delivery, freelancing in your field. Even an extra $400 per week can double your runway from 2 months to 4 months. Some people approach this strategically. Take any income work for the first 30 days while you're still processing everything, then scale back the gig hours as your job search accelerates. The math is simple. If your essential expenses are $3,000 per month and you have $6,000 saved, you have 2 months. If you bring in $1,000 per month from gig work, you now have 4 months. Time is what you're buying. About 55% of companies offer some form of severance pay when they lay off workers. The typical formula is 1 to 2 weeks of pay for every year you worked there. Someone with 5 years at a company might get 10 weeks of pay. That's 2.5 months of salary arriving as a lump sum. This changes everything about your runway calculation. But here's the catch. Severance usually comes with strings attached. You might have to sign a release agreement, and the money often arrives weeks after your last day, not immediately. Knowing whether severance is coming and when helps you decide how aggressive to be with other moves. Your 401k or IRA might look like a lifeline, but it comes with significant costs. If you withdraw before age 59 and a half, you typically pay a 10% penalty plus income taxes on the withdrawal. On a $20,000 withdrawal, you might lose $7,000 to $8,000 to penalties and taxes, walking away with only $12,000 or $13,000. Some people consider loans from their 401k instead. You borrow from yourself and pay yourself back with interest. No taxes or penalties. But if you don't repay it, it becomes a withdrawal with all those costs. Most financial planners treat retirement accounts as the absolute last option. After unemployment benefits, after cutting expenses, after gig income, after everything else. So here's what we covered. Calculate your runway immediately. Total money divided by essential expenses tells you how many months you have. File for unemployment the day you lose the job because the clock starts at filing. not when you decide to file. Compare COBRA to marketplace insurance, since your lower income might qualify you for subsidies. Cut non-essentials fast and prioritize secured debts over unsecured. Look into deferment or forbearance for student loans if you have them. Consider gig work to extend your runway while you search. And treat retirement accounts as the last resort because of penalties and taxes. Losing a job is stressful, but having a clear sequence of moves can help you stay afloat while you find what's next. Everything covered here is for educational purposes only. This is not financial advice. Every situation is different. Consider speaking with a licensed financial advisor before making any major money decisions.